Hello Baker Finance students. We are officially one-fourth of the way completed the course after we wrap up this week, so good job with your forum discussions. I was interested to read about your different companies and the insights, so we'll change directions a little bit on the forum discussion this week, and I want you to watch about a 50-minute video on Mind Over Money, which came out in Nova in 2010, but they did such a great job on the video. It's a timeless video because it leads into discussions about whether markets are efficient or inefficient, or rational or irrational. And I think you'll find it interesting to watch, especially as MBA students and taking a finance course. But with this, after you watch the video, I want you to follow the forum discussion directions. Tell us something you found interesting in the video. Do you think markets are irrational or rational? And to what degree do you think that markets are efficient? Because one of the things you'll read about this week in chapter 7 and 8 is efficient market hypothesis. It was come up by Eugene Fama out of the University of Chicago. Basically, any stock price out that is in the market right now should accurately reflect all available information. And if any new information comes out, you don't have enough time to take advantage of that to try to outperform the market. Essentially, I kind of like the idea that going to the grocery store, you're there, you have your groceries in the cart, you're trying to check out as quickly as possible, you're analyzing all the information about which line you want to get into. Sure enough, you pick a line, and it tends to be the longest line for some reason. So it's hard to outperform the market because there's so many people competing for information. In fact, you have so many choices of mutual funds at work to invest in. Professionals have a hard time beating the market. In fact, your probably just best thing is to do is just pick a S&P 500 index fund and write it out. You're probably going to do better than most professionals out there in the long run. Okay. So with that, jump in the forum discussion early, make your initial post by Thursday, and then make sure to follow up with 2 of your peers by Sunday. With our chapter readings this week, you're going to have chapters 7 and 8. You look at chapter 7, it's going to look at kind of some characteristics of stocks. It talks about the primary market and the secondary market. Most of what we see is about the secondary market. You're going to look at some more details about listings of stocks. When we look at stocks, there's essentially 2 ways to make a return. Well, you make a return, in the dividends or the capital gain. So the 2 of those combined together, if you had bought a stock, say Coca-Cola, it gained $10 in value plus paid $1 in dividends, well, you would have $11 based on whatever price you paid for that. So obviously, as investors, we are concerned about rates of return. We invest in stocks hoping that we get a rate of return. Historically, the stock market has averaged about 10% a year, and we'll look more in detail about that later in the course. But there's a certain opportunity cost that an investor expects by investing in a particular company. With that, also you're going to look at something called the Gordon Growth Model or the Constant Dividend Model. It's a very basic intrinsic value approach to how much you should pay for a company stock, I should say. And it's based on a formula where you look at the dividend 1 year from now divided by K, some required rate of return, minus growth rate. Of course, K is always going to have to be larger in the numerator than growth rate in order to be mathematically possible. Also, if you look at some other things, we look at chapter 8 this week, you're going to start looking at some calculations that are really beneficial to know as a finance student. You're going to look at net present value. Essentially, the argument is whatever opportunity cost that we have given. Again, when we look at present value of cash flows, as we did the past week, when interest rates go up, present values go down, so it's an inverse relationship. But if you do the calculation and you find that it's a positive net present value, the rule would be that you accept the project, that it meets or exceeds your opportunity cost. You're also going to look at how to calculate internal rate of return. Essentially, the internal rate of return sets the net present value equal to 0. It looks at discounting cash flows back and what is the rate of return on that project. Using the internal rate of return method, you'd say if I had a 14% internal rate of return and I required a 10% rate of return, I would accept the project. Probably still best technique is net present value. You're going to look at simple things too, such as the payback, but net present value really can't go wrong. An internal rate of return, doesn't look at the value of the cash flows, if you will. You got to be careful not to, if you're having to decide between two mutually exclusive projects, and if you just took the one with the higher internal rate of return, but it doesn't really add a whole lot of value to the company, well, I would rather have more bang for the buck. And finally, they're going to look at profitability index. It looks at if you had ranked projects, you'd want to go with those with the highest net present value and work your way down until you would run out of money. Finally, kind of some things to wrap up for this week. We do have our first exam this week. It will be on chapters 1 through 6. I've opened up the review sheet. How the exam will work is it will be in a PDF document, and I'll put it out there for access on Friday, so have a window of Friday, Saturday, and Sunday to complete the exam. Just make sure it's submitted before Sunday at midnight. What you will do, it's a multiple choice test, and then on a one-page document, you will just give your letter responses back. So, it say like 1 is C, 2 is C, 3 is C. That's all I want to see is just, based if there are 30 questions or 35 questions, then you'll just give the letter response, and you should be able to fit that all on one page. Other than that, continue with all the good work, encouraged by all the forum discussion, and if you have any questions, do send me an email. And I put partial keys out there for the rest of the course, so that should help guide you when working on your homework. But otherwise, have a great week, and I will talk to you online. Take care.